Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look.
Yesterday's black candlestick in the euro, about 50 pips, formed right after the Fibonacci timeframe line. This means the situation is unfolding according to our main scenario. Now consolidation below the 1.1632 opens the target at 1.1495. The Marlin oscillator has crossed into negative territory. Trading volumes in the euro, however, remain below average. The same is true for energy futures. This indicates cautious sentiment. There are no hidden signs of smoldering fears, but there may be preparation for a breakout of a different kind, as the September Federal Reserve rate cut is already priced in. The market could turn downward on the actual news. The Fed meeting is still a month away, but preparation could be made by selling the euro on Jerome Powell's speech at the Jackson Hole Symposium on August 22. If we look at the euro's behavior without the dollar component, we see a rise in European government bond yields, while US yields are not increasing. Yesterday, the yield on 5-year German bonds rose from 2.27 to 2.33%. This anxiety among German investors began on August 6, when yields were at 2.21. The yield on 5-year UK bonds has also risen since August 6 from 3.96% to 4.12%. A similar picture is observed with French bonds. Genuine anxiety is building in Europe, and this only increases the likelihood of the euro and the pound declining after the Fed's rate cut. On the 4-hour chart, the price has consolidated below the MACD indicator line. It's a blue line on a graphic. And the Marlin oscillator has firmly settled in the bearish territory. The first and primary signs of further decline have been established.
And we're starting with pound sterling dollar pair with thin low.
On the hourly chart, the GBPUSD pair on Monday resumed its decline after rebounding from the 100% retracement level at 1.3586 the last week. Thus, we expect the decline to continue towards 76% retracement level at 1.3482. A rebound of quotes from this level will favor the pound, and a slight rise toward 1.3586. A consolidation of the pass rate below 34.82 will allow us to expect a decline towards the support zone of 34.16, 34.25. The wave situation remains bearish, strange as that many sounds after 2 weeks of growth. The last completed upward wave broke the highs of the 2 previous waves, but the last downward wave also broke all previous lows. The news background has played a huge role in shaping precisely the waves we have seen in recent weeks. In my view, the news background has already turned the path toward the bulls, so the trend may again become bullish in the near future. In the coming days, a downward wave is possible, which would be a corrective pullback. On the 4-hour chart, the pair turned in favor of the dollar, after forming a bearish divergence on the CCI technical indicator. But today, a bullish divergence has already formed on the same indicator, allowing us to expect a resumption of growth towards the 127% retracement level at 1.3795.
That's all for today. See you online soon.